Hello and welcome. Good morning, everyone. Welcome back to the now previous lunchtime hour to breakfast time hour with Jose and myself. Welcome, and good morning.
Good morning, Neil. What are we calling this? The early lunch, or are we going? Or are we switching to the breakfast hour from now
The
on?
brunch time, because if you mix my time and your time, then I guess it's a brunch.
I guess that makes sense. And just hello to all the viewers listening. I think this is going to be the start of a new something more serious, right, Neil? I think we're going to be. We say this every time, but this time I think it's a little more serious on our streaming ends here. We've been working on some pretty cool stuff, hoping to provide a lot of great value to the viewers. So, yeah, exciting week. We got a lot of topics to take a closer look at. I don't know if we got some questions coming in, Neil, that we want to jump in first. But if not, we got some pretty. It's Nvidia week, right? I'm gonna call today Nvidia this week Nvidia week, for sure.
Yeah, it's Nvidia week. This is almost episode. I think this is episode 29. So we're almost at 30 episodes already for this. So although we were not as serious as at the start, we are almost at 30 episodes. So I guess it's not bad. It's not bad.
30 is definitely not bad for the year. I don't think we even started at the beginning of the year. I think we started a little bit later than that. So 30, I'm happy we're at that number right now. And again, good morning to everybody watching. Appreciate you joining us today.
Yeah, so let me maybe share this screen right here so we can have a better look at, well, what's coming up in the next couple of days. So today, there was Pinduoduo already, or going on right now, Chinese e-commerce company. After the market closes, you've got Okta. Other than that, nothing really that wows me at the moment. But Wednesday is the big one. Wednesday after hours especially, you've got Nvidia. Let me zoom in. Nvidia, Salesforce, C3 AI, for those that are interested in that. Then you've got Elf. I know a lot of retail do follow Elf, and another cybersecurity name in Sentinel One. But I do guess that these top two, especially the top one, is going to get all of the attention on Wednesday. And then on Thursday, we have actually a Jose's favorite. I'd say Marvel. It is one where I guess we can talk a little bit more about that, expectations and all. You've got Costco, one of the, well, I'd still say best companies out there, but extremely expensive, over 50 times earnings for a retail company. I call it a retail company. Then we've got Dell, Elastic, Zscaler, and Ulta Beauty. So yeah, I guess if you want, we can start with the Nvidia part.
Um, so Neo, I mean, like you mentioned, a lot of interesting ones. The ones I'm going to be curious here, obviously, Nvidia on Wednesday. Synopsys, even though it's a boring company for most semiconductor investors, I think it's pretty interesting to look at that one on Thursday. And like you mentioned, a lot of popular retail names. I feel like Sentinel One is one that a lot of people follow. Elf is another one that saw a massive pull up. At one point, I was wondering what type of AI did this company add to their type of beauty stuff, because that stock was just rallying like crazy until it took a massive hit. And then Thursday, like you mentioned, Marvell, I'm pretty excited about. We can probably even talk a little bit about that later in today's episode if some have questions. And Dell, I mean, we had Supermicro kind of report a little bit weak stuff. I guess the market is going to be wondering, hey, is Dell any different? How is it, or are we seeing the same kind of picture and color that Supermicro is reporting? Where, remember, Supermicro did push out a lot of their orders for kind of the later half of this year. Because of customers just not wanting to buy the Hopper platform. So it seems like Supermicro maybe got over inventory on the Hopper. How did Dell manage it? Did they manage it even better or worse than Supermicro? So I think that's going to be some of the topics we're gonna see from Dell. Now, Neil, like you mentioned, Nvidia earnings. I am curious about this one. We've gotten a lot of news. The first thing, Neo, is I do believe this quarter isn't going to be anything negative in surprise. I think if we get surprised, it's either going to be, right, there's three ways it can go. It could be neutral, it could be up, guidance, everything on the numbers could be higher than expected or lower. I don't think there's anything in the channels that I follow that are going to tell me there's going to underperform expectations. I think they're actually going to be expectations in forms of revenue and earnings per share on a non-GAAP basis, because remember, they did take that hit on the $5 billion written. It wasn't an actual charge, but they have to write off that inventory, and it's going to hit the earnings per share. So it is going to be crucial to look at the non-GAAP earnings per share and margins. Now, Neil, what I'm really, really excited about is, what are they going to tell us about the Chinese market? And what is guidance going to be after the loss of the Chinese market? Because we did kind of get that new market, the UAE market came in. And obviously, it takes some time for data centers to be built. So I don't think that form of guidance is really going to be much impactful in this quarter, because some of the data centers that they just announced, it takes months. Every different parts of the world is different. Maybe some parts of the world can build them a little bit faster due to maybe less regulations, but it still takes a few months, a few quarters to build up these data centers. And GPUs, Neo, are usually the last things that get purchased, because no one wants to have just a million GPUs just sitting there while everything else is waiting. So usually that ends up kind of being the last thing. So what I'm looking for earnings here, Neo, is, does management give us any color on the guidance? Is this kind of UAE trade deal? When is it really going to start to impact the company in forms of revenue? Is it going to be quarter 3? Is it going to be quarter 4? Or is it going to be something into the next fiscal year? I think that color is going to be very, very important. The second thing, Neil, that I really want to hear about is the NVLink Fusion. They announced this new open ecosystem of their Fabric interconnect solution to help build AI infrastructures. Again, with this one, I don't believe it's something that's going to hit revenues right now, because something like this, Neil, is more of a licensing thing, where you get revenue once it starts ramping up. So it takes some time for companies to design a chip based on something like this. So I don't expect this to be in the guidance for next quarter, but some color on it. For them to open this up, Neil, it means they see a market opportunity. How big is that market opportunity for them to open it up? Because the worst thing, I don't think Nvidia would open it up if there was no need for it. If it was only a few $100 million of revenue, for them it would be like, let's just keep going with our own stuff and proprietary. So for them to be able to announce this, it means, in my opinion, it's at least a multi-billion-dollar potential revenue hitter. So color on that, on when we should really see that. And And there was one more thing I was curious about, Neil. The GB300, the Grace Blackwell Ultra. A lot of the channels I'm following, Neil, have said that the Grace Blackwell Ultra is actually going to ship more than the Grace Blackwell 200 this year. The reason being is they're doing so well with the volume production of it, and kind of like there's no hiccups on supply chain, that even though it's expected to come out in Q3 of this year, it's still going to outsell the Grace Blackwell 200. And we already saw massive demand for the B200. I think the B300 is going to be amazing. So some color on that. So a lot of the things I think investors are going to really want to hear are just, what does the management have to say with the future markets for the next few quarters? Regardless, Neil, and sorry for rambling here on, regardless, Neil, long term, there's so much tailwinds happening. I mean, the UAE, doesn't matter when it happens, it's going to happen. The Stargate in the United States, CapEx from all the big tech players. Companies like CoreWeave also seeing massive capital expenditure. So the tailwind is there for Nvidia of a long-term potential where we sit right now. Now the real question is, in the short term of things, what is that noise going to look like, and how is it going to translate throughout the quarters? And I think that's what, unfortunately, investors are going to be more worried about during this earnings.
Thanks for that. And we have a little comment for you. Jose from Digo, he wants credit recommending Mags, MAGS, in your previous live stream with myself. Show me some credit, he says.
Digo, I think you talked about it last time too. Feel free to take all the credit. Mags is a great ETF. It was an easy way for me to get exposure into my favorite 6 big companies. Digo, I want you to, if you ever find a Mag 6, a Mag 7 excluding Apple, come back to this live stream and let me know if there's something like that. I would gladly give you credit again as well.
Maybe we should make that ETF. A good question here from Paco. What would be the good news to really move the needle? Margins above 75%? Because I think the implied move for earnings is around 8% right now, up or down. We will see. I think 75% is impossible for the quarter. I think this is, they even said it, right? They will only get back to mid-70s towards the back half of the year. And now with the, let's say, uncertainty and the impact of the Chinese stuff, of course, on a non-GAAP basis, you'll get other numbers. But 75% for this quarter is, I think, in my eyes, yeah, I'd still use the word impossible.
Yeah, I think with the margins, it's not, I don't believe it's possible to hit 75 unless I don't think so. It's the volume production that they're doing. They even mentioned that they're ramping up and expediting a lot of the Blackwell stuff, and that's causing a dilution in margins. What I think would really be good news, Neo, is, and it's sucky to say this, and it's always the same answer, guidance for Q2. The reason being, Neo, is this guidance, and I don't know if you can pull up, Neo, maybe some of the guidance while I am talking about this. For Q2, Neo, in the past few weeks, guidance for Q2 based on analyst expectations has dropped by about $1 billion or $2 billion, varies to where it was just about a month ago. The main reason is about a month ago, we kind of got that export restriction on the H20. And it takes some time for analysts to kind of think this, will do their calculations with their calculators and then Excel sheets to find where the new estimates are going to be. So because of the H20 ban, they've reduced their guidance to about, I think, even like closer to $45 to $46 billion. If Nvidia is able to show that the market was not understanding how much external growth there is for Nvidia outside of China, then that would be the good news. If we come out with some massive guidance beat, because remember, a lot of analysts have reduced their guidance due to the fear of the loss of the Chinese market, which is impacting Q2. It's not impacting Q1, it's impacting Q2. So if Nvidia shows, look, we really at this moment have crazy demand that we don't really need that Chinese space, and guidance is actually going to be much higher than what you expect us to be, I think that would be the reason to rally the stock. Now, Neo, I think the same could be said for the opposite direction. The reason the stock would drop would be if analysts already reduced their guidance and they actually give us a guidance weaker than that. Now, that's why at the beginning of this episode, when I did my rant on Nvidia, I talked a lot about the long-term tailwinds. So to me, and Neil, one thing I like to say is Nvidia is that stock for the patient investors, because sometimes if you don't follow this stock, you get hit with those headlines, with those news that everything is bad. And I do believe if guidance is lower for this quarter, that can really trickle the stock to go down. And you're going to see headlines like no tomorrow. Oh, the Chinese market is all that, and Nvidia lost, and this is the end of its growth. If there is a massive sell-off in price there, I think that would be a great buying opportunity, because like we mentioned at the beginning of this episode, all that tailwinds that are behind Nvidia. So short term, anything that really drops the stock, in my opinion, especially below, I've talked about it, 115s, 110s, anywhere below there is where I think the stock is. Forward PE ratio on those levels is like below 30s. I think for Nvidia, that's pretty strong. I think it's even closer to the mid 20s when it goes below 115. So if there is a miss on guidance, I see that as an opportunity, because all the long-term tailwinds, the UAE trade deal, just the massive investments of all capital expenditure, and I believe, Neil, this year we're going to get a few more Stargate projects coming out from OpenAI, which are some massive AI data centers globally.
Yeah, I mean, there was here a question from Roman. Do analysts already priced in the China write-off, or is that going to create bad sentiments on institutional investors still? I think they all expect it already. I mean, it's not something that we don't know, right? Something that Nvidia already told us formally. Same with AMD. So all of Wall Street knows about it. The question is, of course, still about what happens next, and that's the big question mark. I think for the quarter, look what their own guidance was, $43 billion or so for this quarter. I think for the quarter, even with everything that has gone on, the stock will not react based on what they report this quarter. The stock will react probably during the earnings call, when analysts are going to ask about, well, the second half of the year, maybe already 2026, various projects, like you said, maybe already the projects from the UAE and Saudi Arabia, how that's going to impact Nvidia. Wouldn't be even surprise me if we're going to get the type of questions where they basically ask Nvidia point blank, let's say you do lose China, do you think that the new business from UAE and Saudi Arabia is going to be enough to compensate that? So yeah, that's probably going to be the part where the stock moves, I'd say.
And the final thing, Neil, is we have heard some reports that Nvidia is tweaking down its Blackwell version for the Chinese market, the B40. A lot of interesting things have reportedly come out on those rumors. For example, that it's no longer going to use HBM, it's going to use GDDR7, which is more of a consumer-based memory solution. So it is going to be a weaker down version. But for them to be building it, and if those specs are true, it still means that there is a market opportunity for them out there. So I'm expecting Nvidia to share a lot during earnings. Unfortunately, Neil, sometimes I feel like they just share more of a top level overview, and you have to read between the lines. They're not that. I feel like, especially Jensen, he really likes to, and rightfully so. I mean, for him, he's more worried about the growth and future of AI. So these short-term bottlenecks probably suck to him, but I do believe his vision is towards that. So when he talks in the earnings call, that's what he really wants to project. So unfortunately, sometimes as an investor, when we want answers for something that's happening now, we get more of just like that, what I would say best, that politician answer, where it's like, this is how we're working around it, but we don't really get like a definite answer on it.
Yeah, he's a very good salesman. Very good salesman, I'd say. Two Brothers here asks, what % of their sales come from Chinese market? I believe, based on what the numbers last year, it's around 13% or so.
It's in the teens. I forget if it was closer to the mid-teens, but it's as a percentage, it has been decreased. The actual number, billion-wise, Two Brothers has increased, but the percentage is decreasing because the rest of the world is also growing pretty quickly.
United States, especially United States. But the China part is a bigger issue for an AMD and an Intel, for example. AMD China revenue as a % of all revenue is way more than what Nvidia, and Intel is even more than that, because of also the CPU part of their business, of course.
Yeah, for those two players, right, Neil, like you mentioned, it's they're a little bit more diversified in other aspects, and those other aspects, luckily for them, though, at least like the CPUs and stuff like that, aren't really at the moment an export restriction risk. I don't think anyone's worried about training massive large language models on a CPU just yet. So until that's the case, I don't think we have to worry about those revenue segments for AMD and Intel.
Yeah, so let me maybe share this just to show you visually the difference. So we have here overall revenue for Nvidia, $130.4 billion. And then we have 17.1 was China, including Hong Kong. So that's basically it. It did increase over the last couple of years, but one part that did increase way more is, of course, as we all know, is the Singapore part of the whole story. So that, of course, went from 2.2 billion in 2023 to now 23 billion. So that basically 10x in the last 2 fiscal years. But we've already talked about this whole Singapore story way too much, I think.
Yeah, definitely, Neil. And we got this question. I want to answer this from Roman. Is the Nvidia post earnings swing a 50-50 gamble, or are you leaning more towards one side? Roman, I want to say no matter how bullish I am in a company, I always think earnings are 50-50. Management, a random Q&A question can come out of the bat, and the way management responds, because maybe it was a curveball to them or anything, can create some random negative sentiment. Again, a lot of these answers sometimes are read between the lines, and sometimes people read the between the lines pretty wrong. So any earnings, no matter how bullish I am in a company, is 50-50. In the long term, though, that's where I'm looking at my risk to reward ratio being a lot more in my favor. So typically why I really won't pay much a big move on an earnings call. At least not today. Maybe if I had some other information in some other quarters, maybe my thoughts might differ. But with what I know right now, I think it's still 50-50.
Yeah, I mean, now that we are, of course, in 2025, and the swings, like I said, the implied move is 8%, which is way less than what we previously had. Right? Previously, the swings were mostly on the upside, right? Double digits. Now, since, of course, it's also a company that's worth over $3 trillion, the moves are less volatile. And I guess if you want to trade it, I don't even know if it makes that much sense anymore, because you're not really getting that much or as much volatility as you used to get on a stock like Nvidia. Now, again, implied move of 8% does not mean that it cannot go up or down more than 8% the day or 2 or 3 after they reported earnings. So earnings season, earnings reports day are always, I'd say, a gamble, right? Doesn't matter. Even if the report is good, you might lose money because the market is just not in the mood. So,
and like you mentioned, I mean, one thing that could happen is the stock can rally right before earnings. We can see that 8% move happening before the earnings call, and then after that, you could see the stock being flat or something. And that's what I think happens a lot. Like these stocks start to rally a lot, excitement during before earnings. And then when they barely move or drop a few percentage points, like if the stock went up 8% 2 days before earnings and then drops 3% after hours, everybody says, oh, the crash after earnings. Like, no, you're still up a nice amount after since after all the information has been provided.
yeah, and it does seem like today is going to be a good day at the moment. At the moment, futures are green. So let me just show you a little bit of what we might expect in the next 30 minutes or so. So right now, futures Dow Jones up 1.19%, S&P 1.31%, and Nasdaq 1.44%. In Europe on Monday, the markets were also, I think, green. In the US, the markets were closed. Today, markets are green in Europe as well, because we've had, of course, that again flip-flop of a story on tariffs. Right, we had last Friday, which is also something maybe we should talk about. 50% tariffs on Europe starting June 1st or 2nd, and then 25% on Apple. And Well, now they got an extension until, I believe, July 9th, because, well, there was a conversation between President Trump and Ursula von Leyen or whatever from Europe. They asked for an extension. We said, of course, you can get an extension, and then we get some green across the board. But what was interesting to me was the fact that on Friday, the markets, and even with the high 10-year, 20, 30-year, I was expecting the markets to react way more negative. Even on Friday, after the 50% tariff news on Europe, yes, the market started very, very red, but we ended the day not so red. I actually pull it up. I'll pull up the last week's heat map. It wasn't
Wait,
as bad as
Neil. So
expected.
what did we get hit with on Friday that was bad news? I completely. It feels like forever ago already.
The post by Trump that he's going to put 50% tariffs on Europe and
wow.
25 on
yeah, Apple.
Yeah.
Oh, that was only on Friday in my mind, Neo. I thought that was like so long ago, and that's why. Wow, that's wild. That's wild. It's crazy how I feel so many things happen in such a short amount of time.
Yeah, because we had a long week. Well, you had a long weekend because now we're Tuesday, not Monday. Don't forget that. But yeah, this was basically the close on Friday, which again is not the prettiest one, but I mean, it's not that bad. It's not that bad because over the past couple of days, this was basically it. Yes, there is a lot of red, especially for Apple, because that company was targeted specifically, but we're still doing fine. I mean, fine. It would be great if we were always like this over the past month. I mean, this is a wonderful picture, of course. I think both of us are quite happy to see this one in the red. Finally, some common sense in the stock market. But yeah, it's interesting how we switched from what happened April 2nd to what is happening right now.
Overall, pretty excited. I was just looking at the pre-markets for a lot of stocks. We have like Nvidia up 2%. But I think, this is one of those reasons why this year, at least this year for sure, is going to be a year of volatility where you're definitely going to have plenty of opportunities of certain stocks taking massive hits due to random tweets, random trade deals, random stuff. So this is a market where if one day we go super green, the next day we go super red, I'm not going to be shocked at all. And I'm just going to be prepared. I think that's what investors, if you are an investor, you need to be prepared for that this year, or at least for the short term until we kind of get a lot of these trade deals ended or whatever the trade deals happen, you're going to experience a lot of volatility. Volatility we probably don't experience in years.
I mean, that's what we've seen, especially start of April, right? Start of April was very ugly, red every single day. VIX was super high. But yeah, what followed after was pretty nice, I'd say.
And that volatility isn't, I mean, it's just more understanding that your portfolio could take massive swings. But if you are a long-term investor, I mean, I think those create various opportunities. I think, you and I both took that opportunity that we saw on April to really increase our portfolios a little bit more. So I'm not saying be scared of all the volatility, more be prepared for it, but take understand that there could be opportunities that come from it as well.
Yeah, I mean, especially when it comes to companies that, because there are plenty of companies that got impacted because of this tariff news, but made zero sense, right? There are plenty of those, especially financial companies that got impacted quite heavily. For example, Robinhood. If I can load this one up, Robinhood got down to what I think the lowest point was $28 or something like that. For what? Are you going to impose tariffs on Robinhood? It just didn't make much sense. And now if you bought the bottom, you're up 2x since then. So there are opportunities. Volatility can be your friend for sure, especially when things go down like that in a matter of days. Then it's probably an overreaction.
Yeah, just some comments here, Neil, that we have. Vigo, he does agree. He always says Max 6, not Max 7. Max 6 is everything excluding what you want to call it, Apple. Let's see some other questions. Tobias just mentioned lots of insiders are selling on Marvell recently. So Marvell is definitely getting a lot of negative pressure. Neo, they do have earnings this week, and we are getting hit with a few negative sentiments. If we want to look at Marvell real quick, the first negative sentiment, Neo, is the company did cancel their Investor Day presentation. It was expected to be on June 10th, I believe, and they actually moved it till next year, sometime in 2026. We actually don't have an actual date for it. The company mentioned is due to macroeconomic events that because of the current uncertainty in the space, they don't feel comfortable providing the guidance for long terms because it's so much moving parts, which makes sense. Now there are a lot of speculations, that this company is actually losing some of its ASIC customers, and they want to get those answers first before providing the guidance. Now, that's what's creating a lot of bearish sentiment. There are reports that they are going to be losing Amazon for the Trainium 3 or the next generation. Now, while they did cancel the Investor Day, Neil, I would say at least a counterpoint to maybe that thought process is they did announce that they are going to have an AI event on June 17th. And during the AI event is actually when they just talk about all their ASIC players, on about all their data center solutions. So I think we're gonna have we don't have that long to wait to see what the news is there. It seems like that seems to be the three major bearish sentiments for Marvell. It seems insiders are selling. I'm not too familiar, but we see from Tobias here that is the case. Then we see the potential of them losing the Trainium 3 from Amazon. Is there someone that is willing to? Do they have other customers that are going to be similar type of revenue grower? Because the Trainium 2, Neil, I'm getting a lot of reports that is actually going to see some massive ramp this year, and that's actually going to do really well for Marvell. And then the third thing is it really macroeconomic related issues that they canceled the Investor Day, or what's the reasoning behind it?
I mean, it's interesting that, do you know the reason why every big company has that big event like in a matter of a couple of weeks? Like we have everything during mid-May all the way through June, July. Everyone has to have their big event in June 12th, I believe. That's AMD's AI Day. We recently had Computex. You had all the other AI events as well. I have a feeling like this is like a coordinated scheme to make sure that we have so much information we can't really focus on the specifics unless you have unlimited amount of time.
I don't know the reasoning why, Neil. I wonder if I don't know. This is just my thinking. Maybe logistics. If a lot of these analysts have kids, right? And if a lot of these analysts during that time is summer vacation, so it's an ability for these analysts to really travel to other places to get these presentations and be with the kids being off. I guess they can bring. I don't know. Maybe there's some logistic issues, but there's a lot of conferences happening after this earnings. For example, I think AMD has an event this week for an analyst presentation on May 20. I don't know if it's today or tomorrow. They have a investor relations event today or tomorrow. They have one a week before their AI event. So next week, and then the week after that, they have their AI event. So it seems to just be the circus show of analyst events right now. But yeah, I don't know if there's an actual reason. I don't know if maybe they see more traction on summer, and that's when they want to announce cool stuff, or it's just a coincidence this time as there's a lot of things, moving pieces happening so quickly.
Fair enough. Pinduoduo is down 17% pre-market. The reason why is revenue miss and EPS missed. So I guess that's why. I guess that's why. I don't see any other reasons why right now. But it is, again, very, very cheap. But yeah, if you miss like that, I mean, okay, sales came in at 13.2 billion estimated number, so it's $1 billion miss there. EPS $1.57, more than $1 miss. Sales and marketing expense 4.6 billion, up 43% year over year. Still trading at under 4x cash at the moment. Now,
Neil, I know you have Alibaba. Is this one you own, Neil, or
yes.
no?
Alibaba I own. Pinduoduo I used to own, but I just put everything in Alibaba because, I don't know, it was simpler for me. Plus, I get the cloud side of the business.
I mean, this one's interesting. Obviously, right now, I think it's just a great, if one is curious on maybe how the economics globally are happening, this can kind of maybe paint a picture of what's happening in the consumer market in China. Would that be a great thought process to think about these results, Neil, or do you think there's something else happening?
I mean, the numbers for Alibaba were good. So the problem is probably Pinduoduo. Now, again, I haven't looked into the report in depth or anything, just looked at the highlight numbers. So Alibaba is good, which is the reverse of what's been happening previously. Previously, it was Alibaba struggling, Pinduoduo growing super quickly, even though the Chinese economy was not doing well. But now what I had is a good Alibaba report for Taobao and Tmall, which is the China commerce. Internationally, they're doing well as well. The Alibaba Cloud is doing very well, better than expected, in my opinion. So I guess this is a company-specific issue with Pinduoduo. There has always been that question mark around that company that, well, the numbers aren't real, right? Because they're just growing too quickly. The cash isn't real. The numbers aren't real. So I guess maybe that's why you also get such a big impact at the moment.
Yeah, that definitely an interesting market, and I do like your thought process with Alibaba. You do get kind of the cloud side there, Neil. Neil, I got this question here that came in from Roman. Is Nvidia still planning the new H20 chip to China in July 2025, and how does that make you feel now and going into Q3? So, Roman, they are planning kind of like the new version is what we're being reported. And again, Roman, it's not like I have any insider information, but from the channels that I'm following, it's going to be based on the Blackwell architecture. That's something that actually Jensen has mentioned. It's going to be the Blackwell architecture. The name floating around right now is called the B40. So they're still planning on it. I do believe we have heard some talks from Nvidia that they are talking to the U.S. government to make sure that this chip is fine to send to China. If that's the case, then I do think we are gonna see some revenue, maybe not a complete revenue hit from the Chinese market after the loss of H20. I mean, this is going to be a weaker down version of it because there's going to be some, actually it's going to be the Blackwell platform. So again, we have to look at things like performance once we kind of get the actual product. But at least it's going to completely prevent a blood loss of this market if we do enter. So any thoughts on earnings, in my opinion, on this is going to be crucial. And sometimes, Neil, I hate it, but they don't really share too much about their their Chinese variant chips. Like in the past, it's very hard for you. I don't even think you can go to an earnings transcript and look for like the H800 or the H20 or any of these chips because they barely talk about them. It's usually a quick sentence about, yes, we're working on a Chinese product and that's it. And I wish these products are so popular nowadays, that I wish management maybe took a little bit longer time on explaining to investors what's happening. But how does that make you feel going into Q3? If we get some more rumors and stronger reports on it, I think it provides maybe an opportunity for them to outperform some of the numbers that we're seeing for Q3.
And I guess this time they won't really have the chance not to talk about it because analysts are just going to ask again and again about the China part of the business. So they'll have to answer.
And Neo, I don't know if you have a timer to make sure we don't miss the open.
Yeah, we have 18 minutes left.
All right.
So.
And feel free to ask any questions on here. There's one I have here, Neo. I can't find it for some reason on the chat here on stream, but Dico, I heard every gamer being disappointed of how the 5000 series GPUs are for Nvidia, and the cost ratios are pretty bad. So pretty much just kind of talking about what are my thoughts, or what are your thoughts there, Neo, on this? I mean, we've seen a lot of popular YouTubers that are focused in kind of the tech review, really kind of crap on the RTX 5000 line, and
on Nvidia as a whole, actually.
Actually, Nvidia as a whole, how they're even making certain things. They give like a very strict rule out of how you can review a lot of their products, and it's like, how can you do that? And then it's not really a true review then, right? It's us being paid to do some stuff. What are my thoughts about this? So first, I understand both sides, Neo, if I may. I understand these tech reviewer sides, that for them, it makes most sense to be able to compare the product how they normally have compared it. So normally it's just a pure raw kind of frame per seconds and tech testing performance. So I think they should be allowed to do that. But I also do believe that once you start to get, one of the things with the 5000 series is they started to implement a lot of new AI solutions in the stuff. And it's like whenever you have a new product, it's, let's say, I don't know, it's like, let's say I'm comparing a typewriter and a computer. Am I only going to compare how fast they type? Because that's how all typewriters have been kind of reviewed. It's all about just the typing mechanism and stuff like that. No, when a computer, you have more innovations, it's a better typewriter. So you're going to talk about all those other cool stuff outside of that. And I think that's what Nvidia is trying to do, is make sure that no longer are you just talking about this one thing, because this one thing isn't no longer just the gaming GPU. It's so much more. So I can see both sides. I can see the hatred between the consumer, the price points as well. As an investor, though, I'm not too worried about, because obviously right now the data center market is it. That's all you need, the data center space. But obviously some brand alienation is wrong. Again, I think the thought process behind Nvidia of them wanting to show the new products is crucial. And I also understand the other reviewers that are saying that they want to compare things how it used to be. But nothing worrisome as a investor itself.
Yeah, I mean, I think that was also my answer to someone that asked it under a video last week. I was like, okay, this might be good from a consumer standpoint for the likes of AMD, for example. But for Nvidia's business, 90% of their business comes from data center, and so they'll care less, right? They'll care less because they generate 90%+ of their revenue not from those gaming GPUs in your PC, but from the data centers, the things that cost hundreds of billions of dollars. So okay, it's not great, so it's bad PR, but on the other side, they don't really care much.
And I don't think it's that, Neil. I think they still care. I do believe Nvidia still is a gaming company. I mean, they still drop drivers on their solutions quicker than any other platform out there. And I like PJ's thought. I mean, I try not to be too mean, but I agree with them. I think a lot of these reviewers are crying over the wrong reason, and it's creating kind of this negative sentiment. It's when you have new technology, you can't review something how it used to be reviewed. When new technology comes out, you need to adapt your review process with it, and that's something that these reviewers are I think lacking the understanding in, and they're trying to just keep stable to whatever works for their channel. So PJ, I like the way you said it, and I do think at the end of the day, most consumers are still, Nvidia gets hatred every day from the consumer gaming side. Their GPUs have always been on the pricier side, but they continue to dominate even on the consumer market.
Yeah, no, I meant they don't care because financially it doesn't impact them, right?
Yeah, agree. Yeah,
90+% comes from data centers. they won't see that little difference in the number after the comma. But yeah, YouTubers, reviewers always like to complain, while there are some things that, okay, I understand why they complain. Don't forget, it also gets them views. The complaining.
Yeah. Neil, do you know? There's this question here from Waldo. I'm pretty sure it's more of like a general question as well. I don't think Nvidia has. I don't know if there's a specific timeline that a company must hold. I don't think so. I think they can literally buy a stock and then sell it. I don't think that unless there's a contract with. Sometimes they make partnerships, and with these partnerships, there could be somewhere in the contract that look, you're going to get some shares, and you need to hold some shares. There could be sentiments where there might be some legals behind it, but as a general, I don't think there is a form of timeline. I could be wrong. Any thoughts there, Neil?
No, and the only reason the stock drops or pops is because of that 13F, right? It's not because in the background they sold or bought. It's only when we get to know really if they have a position or not. And remember, by the time that we get that information, it might very well be that that position doesn't exist anymore. So yeah, I think we should repeat the same thing. Don't just buy the company just because it pops up in a 13F of a big tech company.
100%. It's never chase just because they reported on the 13F numbers. Let's see. There was another few questions here. Oh, I like this question from Martin, Neil. We kind of talked a little bit about it at the beginning, and for some reason, I don't get all the questions here. So Martin, a few minutes ago, asked, "What are your opinions on guidance concerning the UAE and Stargate?" So Neil, for me, I talked about it. It takes time to build data centers, and it takes time to build this infrastructure, kind of build the shell, the building itself. So I don't think, in my opinion, Martin, I don't think guidance for this quarter is going to be much impacted by the UAE and Stargate, because we still have to see. I don't know how far along they are in the building of these data centers. Did the UAE actually know these things were going to happen, so that they preemptively start building these data centers? If the answer is no and they're kind of starting, then I believe this guidance, the UAE and Stargate revenue, is not going to come until at least a few quarters from now, maybe closer to the Grace Blackwell Ultra era. So maybe quarter 3, quarter 4, or even quarter 1 of next year. So Martin, that's what I'm pretty interested about during the earnings call, Martin, is what can they give us on the color of this UAE and the Stargate projects, and when are we going to see that revenue really move in? But my best gut basis says that it's not going to impact much, if any, at all, this quarter, or maybe even next quarter at all.
There's a question here from Russell. If you are a little cash light and want to buy any dips, if Nvidia, for example, rises after the earnings call, is it worth selling and then buy back later after earnings call, or sell a little, specifically trade as Hood or Micron? Now, again, this is not personal financial advice or anything like that, but this is crystal ball type of talking, right? Because you don't know what's going to happen. If it rises, then you sell, and then you think you can buy it back lower. You don't know. You don't know if it goes back lower, right? You can sell and it goes even higher, and then you're stuck. So I never have such a plan like, oh, if this happens, then that happens, and then because you don't know what's going to happen. So either you want to own Nvidia and you're happy with that, or you do not want to own the rest, so you have to sell the rest regardless. Because what's the point of holding companies you don't want to own? Even if you're down or not, doesn't matter.
Neil, here, I mean, no advice here, and this is all crystal ball. We can say one thing, and then the next day the opposite happens, and be like, I can't believe I listened to this guy. So, no advice here. Normally, Neil, what I would do is, if my position of Nvidia I felt is too big, and I saw the stock rally, then I don't mind taking a bit of a I would never, in most of my positions, it's very rare for me to sell out a whole position. The best thing I would do is maybe sell, hey, maybe if I get sold 5% of this position, I'm now building up that cash, bringing it up after going up a nice amount. Or the other thing, Neil, is let's say I had 10,000 shares of Nvidia or somewhere or in some whatever, some random hundreds. Let's just make it easy, 1,000 shares of Nvidia. And that was cash light. One thing that I wouldn't mind doing, and this gets a little tricky, is selling one or two puts, selling one or two calls. My apologies. Selling one or two calls at a higher price point where if the stock sells, I lose 1 or 200 shares out of my 1,000 shares, so I still keep 80%. But it's an ability to grow cash and to also kind of have a sell point with it if it hits that. So doing options is really tricky. I really wouldn't recommend it. But if I was cash light and maybe had a reason to do it, there was a lot of volatility. Selling a few calls on a small percentage of my position, not the whole, because if you do your whole, you're screwed. But a small percentage of your position isn't a bad idea that I normally tend to do as well.
Yeah, Waldo here says about going back to the 13F and their investment. I mean, they basically 2x their CoreWeave position. I mean, they didn't reach 2x because they probably bought before at a higher price before the lows back in April. But they're probably up significantly on that position. So we'll see.
I think I think, Neil, they anchored the IPO at $40. So most of their purchase was actually at the $40 price point because no one wanted to buy CoreWeave when it IPO. I find that wild how sentiments and investors change so quickly. The IPO was probably one of the worst IPOs. They had to reduce the amount of shares that they were going to sell. They had to reduce their price target from like $40-something, 47, I think it was, 47, 48 to 40-something to $40, almost a 20% reduction in valuation. And now just 2 months later, everybody's like, this is the greatest thing ever. I really do enjoy CoreWeave, though. I still own it. But it's crazy how sentiments change so quickly.
Yeah, no, for sure. I mean, actually, let me actually look it up just to show how crazy the stock has been. Let's see. And we do have 5 minutes before the market opens. Still looking pretty good so far. So this is basically CoreWeave over the past, well, since it went public. Not bad, I'd say. You went here, you went public, you went down 36, then you went up. This was the peak before the April crash at 63, then went all the way back down to $33, and then we made our way up and up and up to the $108 at the moment. Pretty insane.
Yeah, this one makes me really happy. You know, I'm pretty happy. I owned a really good meme stock when it was slow. So this one is pretty fun for me this year.
Yeah, did you ever look into Applied Digital? I'm sure we talked about it once or something, but a long time ago. I believe this was also one where Nvidia maybe had a position in it or something like that.
Yeah, I think they still do. Yeah, this one very similar to a lot of these players, Neo. A lot of them started off as kind of like those crypto mining companies, and then they used that data center infrastructure and that ability to build some of these big data centers. Some of those mining crazes can kind of translate a little bit, not much, but they already had kind of the infrastructure, the power solution, and they transformed into these data centers. So there's a lot of players out there. I think there's even one called Wolf, WULF. I think it's another one that's like in this type of era as well. But it's hard to pick, find out which one is the best or the least.
And then maybe we should talk about this guy right here, an actual company.
What guy is this? Google. Man, this is one I don't know why the market hates this, Neo. I just don't get it. This is top tier, in my opinion, of top tiers.
I mean, since let's call it the bottom here, it is up 20%. Okay. I mean, yeah, to move $1 trillion to now $2 trillion company, it's going to take a lot, even though Nvidia was up 40% from the lows back in April. So I still think we can reach all-time highs after the lawsuits are over. I think that's just holding back the stock. I don't think it's the AI scare anymore, because from everything that we've seen in the past couple of weeks and heard, Sundar went on the All In podcast. We had Sergey Brin on the All In podcast last week. We had Google I/O, the earnings report. All of it has shown me, and probably you as well, that they're doing very well. They're doing much, much better than what the market gives them credit. So yeah, I still think it has to do with the lawsuits. Although again, I don't think much will happen. I don't think they will be broken up or anything like that. But it's just, I guess, that headline that needs to come out, and suddenly the stock will move, because it is a tremendous business that is trading at a very, very good price.
Like you mentioned, I mean, I think this one's going to demolish the AI market completely. I think it's going to be one of the strong players. And the great thing about it is one of those few companies that has AI and has a lot of use cases that can be thrown to the consumers without much of a hurdle or much of like an entry point. So for example, like OpenAI, if they introduce some new type of product, it's like, can OpenAI really introduce a hardware system? We know Google can kind of do it with the Google Pixel. They've done like the Google Chrome when it was a hardware. I don't know if it's still a hardware solution. But we know Google can release hardware products, and the Google brand is very known. So if they do announce something like AR, or we've seen like their AR glasses, I think it has maybe not the same strength as an Apple. I think Apple could release a toilet paper and everybody would go, all the Apple fiends would go buy the toilet paper. I don't think Google can do that, but it's almost to that level, in my opinion, Neil, where I think that's a strong perk, at least for the AI space, where it's such a emerging technology. The ability to be able to have your consumers try it out, and you get hooked in that product is a pretty strong moat. And AI, their data center cloud is amazing. Neil, is becoming more profitable and profitable. And the YouTube is crazy. I don't know. This one's wild.
Yeah, and with that, the market is open, and it does seem like we are green for tech. Microsoft up 1.4, Google, Alphabet only 1, Meta 1.3, Nvidia is up 2%, 2.1%.
AMD 2.6%.
Very nice.
Yeah.
AMD is back at 113. Okay, cute, cute, I'd say. Salesforce is red a day before earnings, 3.6%. But I guess it's because of that report last Friday, I think, that came out, that they wanted to acquire a company, Informatica. They wanted to buy that. So I guess more acquisitions for Salesforce, and that's one of the reasons why the stock is down. There was someone that asked a question about Salesforce at the start. It's an interesting company because it is very profitable, right? It is a solid compounder, free cash flow, billions in free cash flow, buys back. Oh, that was a nice switch of to lots of green here. And Salesforce is now flat. So I guess we needed a little refresher here, but it is a solid company. But it does seem like it is more of a company that buys growth, right? As we've seen before with Slack, with Tableau, with all the other companies that they've acquired over the past 10 years or so.
Yeah, right now, Neil, it seems pretty great for, the AI space. You have your Nvidia up 2.5%. You have AMD up 2.5%. Broadcom is also killing it, up 1.6%. Oracle, I think Oracle, again, Neil, this stock was one I added onto when we kind of saw the dip. I think Oracle having the Stargate project, I think Microsoft de-riskifying themselves a little bit and making Oracle be the money spender is going to be really great news for Oracle. once we start to get those Stargate projects RPOs on their numbers, I think the management, I think the market is going to go crazy on Oracle, and Tesla up 3%. I see as well. So pretty good.
Must have been because of bad news, because it only goes up on bad news.
Oh man, yeah. So seems to be good for us techies, at least at the moment. Anything really red right now, Neil? I don't really see anything too red. If that,
No, nothing.
there's
Really
something
red.
in retail trade that I see red. It's under Costco. I don't know what that is. Under Costco in retail, to your left, to your left, to your right. Yeah.
What is
Some
this?
random.
AutoZone, I think.
Oh, is that it? Wow, you're good, Neil. You're good.
Yeah.
Ding, ding, ding. Yeah.
Yeah. But I mean, red. It's not that. It's barely red. Now it's green.
Yeah. Yeah. I mean, market. I mean, overall, pretty bullish in long term. CrowdStrike has been. I've heard CrowdStrike's name pretty recently. Pretty often recently. Neil, has there been any major news impacting CrowdStrike that you know about? I just know that it had hit like new 52-week high, and I don't know if that's the only sentiment behind it, or if there's something pretty cool coming out of this. A lot of cool stuff, but anything recent that is driving that momentum right now.
I think new all-time highs even.
Yeah, nice.
That's crazy. I mean, it's crazy because remember last year where it was after that outage, and it seems like nothing can stop that company. But maybe the name popped up because Palo Alto reported a week or two ago cybersecurity. So I guess that's why we're getting that attention. But yeah, CrowdStrike is a very, very good, strong company. Let's see what AMD is doing at the moment. It's my Picasso drawings here. Yeah, so it does seem like we opened pretty well for AMD. Now we're dropping a little bit, but fine. Bitcoin is at 110,000. Pretty impressive. Pretty impressive. Let's see what's our little SoFi is doing today. Well, SoFi seems like started the day okay, but I think this is the trend, right? What we're seeing right now is a big green opening, and then we're going down. Marvel, yes, same thing here, although the big move will probably happen after earnings. Meta, same story. These candles do look dramatic, but guys, don't forget these are just worth a couple of dollars here and there. This is just the 1 minute chart. Amazon's still above $200, so comfortably there.
Yeah, and I'm trying to do some quick research. You know, there was somebody who asked about a company, Excelis Technologies. I know it's a semiconductor equipment space, but I'm just trying to get some quick info before I share my thoughts on there. So, like always, if any of the viewers have any questions in semiconductor space or whatever, feel free to just throw them in the chat, and we'll definitely try our best to get some information.
Rocket Lab is up 7% today, almost 8% actually. Did I miss something? Maybe
you owned that one, Neil?
Of course. This is one where, luckily for me, I owned it at the right price.
Neil, I don't know. No, never mind. That was me.
No. Let's see what we have. Why Rocket Lab is actually up. I'm not complaining. This one I'm up, I think, was it now 400% almost? Quite nice. How is Hood? Hood is good. Hood is up 1.4%, opened a little bit higher, but as we've seen across the board, there has been a little bit of selling since the open, but yeah, Hood has still been doing quite well.
So, Neil, what do you think is happening with the market? I mean, it's just, I feel like there was obviously the extension is interesting, but it's like no real news, right? I mean, it's just an extra 30 days before some more trade deals and stuff
Yeah.
happens. What do you think the market is getting tired of, like these types of news? Do you think, is there like a fatigue of extensions opportunity, and now it's like we're getting tired of this, we want to see more actual deals?
Yeah, so I guess it's a combination, right? It's a combination of, first of all, remember at the start, everyone was saying nobody cares about these small deals. We all want the big deal with China and maybe Japan, South Korea, India, and the UK. We already get the UK. I've seen a report today that an India deal is pretty close. We've had talks with China, so that's positive. And then there is Europe. Okay, we've had that early reaction on Friday, but I guess, yeah, the market is just like, you know what, we are maybe a bit tired of it. Plus, it did definitely overreact in April. So while we are much higher than the April lows, we are still a little bit lower than the highs of February, which again, that doesn't mean that we have to revisit that ASAP. But I always say I like to look at companies and less of the market, because there were plenty of companies that it just didn't make any sense for them to trade at these cheap prices. Today, there are companies that have recovered, in my opinion, too quickly as well. But then again, I'm not not going to complain that much about it going higher. But yeah, I guess the market is now in this. Okay, let's wait and see. The more deals that get made, the better it is. So that's the situation right now. Plus, remember, we had earnings season. We still have it, which were, in my opinion, much better than expected. CPI, PPI reports that were better than feared. So, okay, the rising yields are maybe the negative part here over the last month and a half. The Moody's downgrade, I'm not even going to focus on that at all, because they were just following the other two, which means that the US was already not a AAA one. So that didn't really have such a big impact. So yeah, I guess we're back to I won't say square one, but close to where we should be. And I know the bears would not like to hear that, because they would love for the market to go down. But yeah, tough luck.
Yeah, Neil, I for some reason I can't pull up. Thanks for that. And I see this question coming in from Scott. I really like it. I can't pull it up, Neil. I don't know if you could
This
find
one?
it. It just came in. Yes, this one is an interesting one in my opinion. So Scott just asked, is the UAE building a data center or an AI factory? And what is the difference, and will other countries follow? So Scott, I do think I want to say yes and yes. So there is a difference between a data center a data center and an AI factory, and I'll talk about that in a bit. And will other countries follow? I think the answer is yes as well. So first is, what is the difference between a data center and AI factory? Now, if you're looking at it from maybe the outside point of view, Neil, you would think they look the same. It's pretty much in forms of the infrastructure, it's all the same. The data, it's AI factory is like I think the easiest way to put about it is like a subsegment of a data center. Or it's just a new way of a data center, a new type of data center, how Jensen explains it. So in forms of how you build a AI center, a data center in an AI factory, it's pretty much the same. You need power, you need ways to cool massive AI servers, you need the cooling solutions, you need the power management solution, you need someone running these and installing massive racks all over the place. So they, in theory, look the same. Now, the main difference between them, Scott, is what they're actually doing. A data center is normally, the traditional data center is what you see nowadays, where like a company will put if you're running an application, you're going to run it on the cloud, you're going to run it somewhere, you're going to run it in the data center, and it's going to collect, it's going to have all this information, all this storage, and everything like that. So it's going to be more what you typically see. AI factory, on the other hand, their only main goal is to run large language models and to run the inference behind them. In theory, these are not going to do like anything else except just running inference and large language models and tokens. That's their whole purpose. And this is just because there's such a huge demand for AI solutions that you need to have these types of factories located in whatever type of country you want, for lower latency and lower solutions like that. So I think we're going to see difference. I think you're going to see different countries follow it, and you're also going to see there is a difference between data centers and AI factories. Scott, I would definitely recommend looking at Nvidia's quarter earnings presentation for last quarter. They have a few slides explaining how the data center is different from the AI factories.
We have here SJ. Hi guys, from Cruise Ship World Europa, sponsored from Palantir Shared. I saw this.
Nice.
Nice. Congratulations.
Yeah.
Palantir at $125, so still I think above. I'd say $300 billion company. Yeah, 296 actually. It does seem like some stocks are fading a little bit. I do want to touch a little bit on AST Space Mobile. I talked a little bit about that company yesterday on the channel. So that one is up 2.5%. Again, the couch pump has worked. Congratulations. Oklo is one that, of course, I know. Do you follow this a bit closer than myself?
Which one's this one, Neil?
Oklo, the nuclear.
That's the only thing I know about it, is the nuclear stuff. And I thought Friday or Thursday there were rumors that Trump was going to sign some great things for the nuclear state of things, and I don't know if that actually happened though. I know that was kind of one of the reasons the nuclear stocks were rallying on Friday.
Yeah, I mean, you look at this, it seems like the perfect cup and handle pattern that can happen. This one also more than doubled since the lows back in April. And of course, nuclear stocks, just like quantum stocks, did get a lot of attention in the past months or so. I mean, back in September 2024, this was a $6 stock. So yeah, this is again one of those that went up higher. This is, again, could be a very good long-term winner, but we're still talking about nuclear, and regulations, permits, all of that take a lot of time. And I'm not even talking about the build outs, right, of the SMRs or whatnot. These things will take time. So yes, you're of course already buying, I guess, years of future growth at these prices. But I guess this name, is it this name or this one? Constellation Energy might be a more solid pick. I'd say maybe less volatile than, although less volatile. But this one has also doubled. But I guess financially wise, they're maybe in a better place at the moment. I think Oklo, there was also Sam Altman is involved in that company somehow or something like that.
He was, but I think he stepped down recently as being any part of it. And I think the market even rallied on that, because I think he mentioned the reason he stepped down is so that company can have the potential of working with other AI customers in the future, and maybe having kind of him in the board or wherever he was kind of alienated some other customers, because everybody was like, oh, this is open AI. Why would we want to work with someone that has the open AI play?
Okay. Fair enough.
Neil, I don't know if you can pull up this stock really quick, ACLS. Boy asked if we have any thoughts on this and about its potential growth. So I'm going to most likely butcher its name, Axiles. This is a semiconductor equipment company. Neil, I was just getting my thoughts again on it. It does work on a special kind of ion implementation tool that is used in a lot of type of manufacturing process, but the one this company is more exposed into is kind of the silicon carbide space, which is kind of being driven a lot by kind of the EV space, the EV market. So this is one of the reasons this stock has kind of taken quite a hit recently, is that type of market right now. The EV space, just like any other automotive space, has kind of taken a massive slowdown since the 2020s. The other thing, Neil, that about it is this company does have a lot of exposure into the Chinese space. Recent revenues show some very, very high double digits into the Chinese market. So obviously any fears of regulations and stuff like that can create some volatility for that. Now, the overall growth opportunities are, like I mentioned, silicon carbide, EV drivetrains, fast chargers. I do believe this market is going to be picking up eventually. I don't know when. This kind of down cycle on the automotive space can still be weak for a few more quarters, maybe in a few more years. But in the long term, I do believe there's a massive need for the EV space. Now, the other thing is they are kind of increasing some of their manufacturing facilities with some of the solutions that they have. They are also building some new fabs in the United States and other parts around the world to kind of diversify with random investments. Now, the big risk, like I mentioned, they are very heavily into a market that's pretty weak right now. They do have a lot of exposure to the Chinese space, which are being revised by various export restrictions. And they do have a lot of kind of customer concentrations with a lot of these kind of large power scale players, your Infineon, Wolfspeed, that is reportedly going to go bankrupt pretty soon if they haven't on semi. So from their big customer concentration, we can continue to see that this market is still pretty weak. So there is growth opportunities, but there is risk. The real risk is during this weak market, is this company going to be able to withstand all the headwinds before those tailwinds really pick up? If it can, then obviously this can provide some great returns. But if it slips up like Wolfspeed and builds up too much debt and is not able to survive the downturn, then that's a whole different story.
Thank you for that. You did touch a little bit, I think, last week about this guy that moved a lot based on, again, an Nvidia connection. Oh, actually, we can see this right here, right? They went from basically sub $2 to $5.
Yeah, Neil, I mean, to me, this one is a super small company. So if they get any form of revenue out of this partnership, it can be very bullish. And I think that's what the market is expecting now. Remember, what they announced here is more of a partnership of collaboration in technology. And it's not with just this company. They're working with a lot of other players that I just mentioned. Infineon was one of them. I forget a few other kind of power solutions. So Nvidia is just working with others to create new technology, and whoever designs that technology the best is most likely going to win Nvidia's revenue out of it or their spending. Now, by obviously being included in the list, your chances of succeeding have increased dramatically, and I think that's what the market is paying. I know there might be a little bit of other YouTubers. I don't know if I'm not sure. I think Fired Up Wealth might follow this one a little bit more. But I'm not too close. I don't follow it too much. The power market, in my opinion, is very competitive. And for that reason, I would say just be careful. Volatility on this can be pretty high. And the second thing is it's more of a collaboration. It's not a promise of revenue just yet.
Yeah, no, fair enough. Again, one of those probably that you put in your 1% basket, something like that, and see where it goes. Although right now, when it's up that much, I don't know if it's worth chasing, but you do what's best for you. The nice name here, Loser Man, is asking about the opinion on solar market's future. So when we had that big, beautiful bill pass the House, which still needs to pass the Senate, we had companies, stocks like Enphase that crashed. As you can see right here, a nice little crash for Enphase. We've had Sunrun do the exact same thing, big crash there. First Solar is one that did come down, but not as much as the others. The reason is, first of all, the business for First Solar is less focused on residentials, less focused, I'd say, also on the main tax credits. One of the reasons why Enphase business has struggled over the past couple of years is because, well, interest rates are quite high. People are not going to spend tens of thousands of dollars on solar panels if rates are so high. If rates come down, then it's another question. But I do still think that there is a future for First Solar, for Enphase. I would maybe put here a prediction. I would still think that some changes will be made to that bill, especially when it comes to energy and and solar as well, because it would be in the US's disadvantage to hurt this industry and destroy these businesses, because also these businesses, they've planned their near-term future based on the info that they got, based on, okay, there are still going to be incentives, plus we are already getting screwed by the fact that interest rates are staying so high. So if you suddenly remove all of it, although it will be phased out a bit slower than what the headlines are saying, but still it's going to impact the business negatively. I've been saying the same thing. Enphase, I do think there is a future there. It is a good company. There are still a lot of short-term issues around the industry, and that's why I think that long-term call options are maybe the better the better option here than just straight out shares. Because I also think that the 2027 January calls are very cheap, so you still have that time. You don't have to be stuck with your straight out shares right now, which are taking a hit. So options gives you a bit more flexibility as well. It's a bit like what Bill Ackman did with his Nike position. Sold the shares, but went long through call options, long dated ones. So he acknowledges that the turnaround is going to take time. And so he also has to manage the portfolio. So options for him made more sense than straight out shares.
And Neil, right now I'm looking at my some of my stocks here. It seems like right now there seems to be a lot of excitement in certain semiconductor equipment players. I see Air Technologies, ticker AEHR, is up 6%. We have another kind of semiconductor equipment player, Nova Ltd, which is ticker NVMI, up about 5%. Other companies, Onto is up about 3.5%. ASML is actually up 3.3%. And a lot of other popular semiconductor equipment stocks are up about 2 to 3% throughout the day. I mean, Lam Research, Clack are all up about 3%. I wonder what's happening here. I don't see it right now, but it seems like the equipment space just got some bullish sentiment. I wonder if some maybe exemption to tariffs. Let me just see if there's anything we can see right now. Semiconductor equipment, because it is pretty weird that these semiconductor equipment stocks are just going up a nice amount right now.
Yeah, so far nothing.
Yeah, nothing really. The only other thing is, I wonder if there is. I know there's a lot of events happening this week in the in the tech space, like I mentioned, conferences. I wonder if somebody said something during a conference that is exciting the whole market.
Can't see anything.
Yeah, same. I don't see anything, but I just thought it was pretty interesting to see some of those companies up a nice amount right now. Yeah, actually, there's no even companies actually reporting anything today. Tomorrow we do have. It's tomorrow morning. Neil, AMT is having TD Cowen Analyst Day event with a lot of other companies as well.
I see Nancy Pelosi's Tempus AI is up a nice amount today, close to 9%. Well done.
Well done. She should have a live stream. That's a live stream I would follow.
Yeah. I mean, if she's going to sell some courses.
She should have a Discord group.
Discord, Telegram, everything.
Everything, yo. That is too funny. You're a funny guy.
Thank you. I do have something funnier to show you in just a second. That will blow your mind. Or maybe not, I don't know. But
let's see. Go ahead. Go ahead.
Here you go. OnlyFans is possibly the most revenue-efficient company in the world, and no one comes even close.
You're close. That's wild. That is wild.
So when do we invest?
I'm actually impressed about some of the other names, though.
Yeah.
Like I knew Nvidia was up there. I didn't know Cursor was that high. I think Cursor is that AI application
Mm-hmm.
company, right? That's pretty impressive. Um, I hate that other one. Meta's also pretty impressive.
Alphabet is
This
up there.
OpenAI is up,
OpenAI.
but it's the most revenue efficient. We should also see the least
Yeah, most
earnings
cash burn.
efficient. Yeah, the most cash burn for employees. That would be a pretty cool list to see, and wonder how many of these um, OpenAI would definitely make it. Now I'm curious more: is Cursor making that much money, but is it in the same boat as OpenAI, where it's like losing a lot? Maybe not, because it's not developing its own large
Yeah.
language solutions. So
I
margins
mean,
are probably better there.
imagine whoever buys OnlyFans, imagine the data set that you get from it. It's incredible.
Yeah, you're gonna get I guess it's gonna be some image generating tool that's gonna end up buying it or something like that.
Image generating tool, I'm thinking more of blackmail.
OpenAI's next acquisition.
Oh, yeah. A 9-minute clip of Sam Altman. Whatever. I'm not even going to continue the phrase.
Yeah.
But yeah, this is crazy.
Uh,
I mean, the amount of money, it's actually funny. I made a video about OnlyFans on my channel.
you made an OnlyFans on your channel? That's
Yeah,
props to you, Neil.
yeah.
Props to you.
July 2021.
When you get a Neil membership on his YouTube channel, this is what you get. Exclusive content.
Exactly. Now that I'm seeing here, this was an opportunity to invest in it. I made a video when it was valued at the first time at $1 billion. That was 2021. I think right now the valuation is closer to
it's
8.
8 billion. Yeah, I heard that. That is wild.
Should have invested.
Should have
invested in the best company out there.
Best one, yeah. Neil, before we end up, I want to take this question from Russell that just came out. I don't know if you could pull it up really quickly. I think Elon said we are drastically short on semiconductor production, slowing supply. So if I recall correctly, Russell, he mentions that he still believes we are somewhat AI chip shortage, a little bit, not by much. He said a little bit, I think was his niche, and that's something that should be fixed pretty quickly. So he says the first bottleneck with AI is chip shortage, super small. The second thing, Neil, is power equipment solutions, or kind of the equipment needed for these power for like transformers. Transformers was one of the things that he mentioned. So and that's something that Nvidia is trying to end with that NVTS partnership and all these other players, is eliminate the need of certain transformers. So it's the equipment for a lot of these power solutions. That's the second thing. The third thing he mentioned was another shortage, Neil, was capacity of power. The actual infrastructure, the grid power, is another shortage, and that's the third one, and that's the biggest one he sees right now. And then in the fourth one he mentioned, was just the workforce. He believes the workforce of like electricians and all these is pretty low. So it's not I don't think it's the semiconductor production has slow supply. It's more the power solutions of the infrastructure that has the biggest weakness at the moment. And with that, Neil, I need to jet out soon.
Yeah, let me quickly close out with maybe the heat map of the day. So we get a nice little exit here. Ta-da, pretty good. Pretty good.
We did this, Neil.
Exactly. Twice in a row, I think.
Twice in a row.
Twice in a row. Yeah, so pretty good stream. We should be back on Thursday, I think, right? Same hour, Thursday?
Yeah, Thursday for sure. I'm going to talk to you privately for maybe even tomorrow if there's opportunity, but...
Yeah, tomorrow is a big day. I think tomorrow night, after hours, you have your big Nvidia stream, so the big one. Hopefully it crashes.
The stream or the stock? Either or would be... Well, one of them would do good for the stream.
Yeah. The crash would be good for video.
The
stream not so much.
That's true.
So anyways, thank you all for joining. We will be back for more brunch hour, I guess, shows Thursday, and we will expand to more days as well in the future.
Yeah,
So-
we're expanding. We're growing. Our portfolios are growing, so we get to do this a little bit more.
Exactly. So thank you very much and have a pleasant